Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're gonna go through Twitter, see what people are talking about. I'm gonna interject my financial opinions across the board. It's gonna be finance, wealth building, or commodity related for the most part. And if you guys need any help with anything, check out finding-value.com. I got a discount going on right now. You can use the word happy birthday in the coupon code and get yourself a discount on the first month, 50% off, if you'd like to try it. All right, guys, let's dive in here and see what's going on. And if you want to follow me, it's at finding_finance on Twitter. The EIA should be more or less the same in terms of crude oil. I expected a slightly bigger draw, though. We shall see. So we're looking at a draw of 800,000 crude, 3 million Cushing, 2.8 million gasoline, and 100,000 distillates. We've got Nick Shaw here. He says, we know that the pandemic changed the housing U.S. market, but how big of a shift did it create? Stay tuned for MetroWise trend shifts. He's got a shift here of about 73,000. I think that's all attributed to how much money went into the system, and that's what it's accounting for. So the shift never really occurred. They just threw a bunch of money and it shifted higher to account for the money supply growth. It didn't really shift in real terms. At least that's my take on it. Housing market update. Homes on the market at record low of 1.3 million. Record low. How can you be in a housing bubble at record low inventory? 53% of homes require income of 125,000 plus to afford. Average 30-year mortgage at 7%. Mortgage demand lowest since 1995. Median rent payments hits 2,000 a month. This is the least affordable housing market in history. I'm not sure if this is a true statement. I think in the 1980, late 70s, 80 might be the worst. And I don't know how they adjust all of that because it's probable that the average house size is also bigger than what it was back then as well. We've got FSM here, Fortuna Silver Mines, massively long. Kaboom, we're about to break. We've got the downtrend line. It's been consolidating sideways. Probably a big move to the upside coming. Jesse says, fund managers are underweight commodities. Yeah, they're on the wrong side of this. Every time these are at lows, they're generally on the wrong side. So I think we're going to break to the upside. Commodities are going to have money flow into them as we enter wave 3. We've got Dow Gold equals 1. Silver's ready to fly. And yeah, we're ready to break out here, guys. Let's rip this thing. Looking really good. This is the silver quarterly he's got. Long way to go, but if it holds, this is a massively important historical breakout. 35 bucks is likely the first stop on the way to 50. Yeah, breaking $31 is also the quarter or yearly closing price that needs to break. So if we close above 31 on a year at the end of this year, I would consider that to be a breakout. OIH on the verge of something big, looks massive to break to the upside for OIH. We've got Happy Hawaiian. He's jumping on the train. $300 to $400 oil isn't a crazy target. It's going to hurt, but it's a perfectly normal oil bull cycle. And he's got 370 there if it hits the top of this trend, or I should say of this channel. I've got URA. Is it at the ideal buy point? So we've got URA here, who basically we've broken out of this consolidation here. And it's very similar to the ideal buy point of B. So we break out, we come back to B, and hopefully we go into a new long-term uptrend. Eric Nuttall, the end of meaningful shale growth and a largely depleted SPR is rather potent combination. SPR is depleted and we are leveling out for shale growth. What I say here is get stuck into your positions here and sit. The big move is coming. And that's a breakout on gold. It's starting to move on up. Silver's breaking out. We haven't broken out the XEU to gold ratio, but it looks very close for that to break. And platinum's got a big pattern that hopefully we can get moving on as well. And that's generally when you want to get long on something, you just sit and wait when you break all these patterns to the upside, just like we have. Again, you better get stuck in. The rides are going to get fun here. So PSCE is about to break to the upside for the small cap energy ETF. That is a mixture of nat gas, oil, and energy service companies that are all small cap. OIH is looking fantastic. We had a false breakdown. We're starting to come on up, and I think we're going to accelerate to the upside at some point here. And it's looking really good in the short term. And we've got crude oil. I know I had to squeeze this up because I think crude oil can get way up here somewhere. So we've got a nice big consolidation bull market, or we had a consolidation here in the 2000s, early 2000s, and we had a nice big bull from 98 all the way to 2008, about 10 years for crude. And I think we're going to get to 2020 all the way to 2030 or something like that is probably going to be a big bull market in crude oil. Home builders continue to tear it up. You know what goes up when these home builders go up? Commodities do. And we're seeing these brand new all-time highs. Lennar Corp killing it. We've got Meritage Homes at all-time highs, killing it. Toll Brothers all-time highs, killing it. And then D.R. Horton killing it to the upside there. But you know what? We're in a housing bubble, and these guys are still making new highs. And just to let you know, these guys peaked in 2005 last time, which means we're not seeing the peak yet. Home prices generally lag behind home builders. Goldman Sachs forecast model thinks the unemployment rate will stay below 4% through 2026, and the 10-year Treasury yield will average 3.75% in 24 to 26. They just released its own housing forecast. Their model for Goldman Sachs expects U.S. home prices, as measured by the Case-Shiller, to rise 1.3% in 2023, 1.7% in 24, 2.4% in 25, and 3.8% in 26. Wait, that's accelerating home price growth over time. Largest U.S. home builder. Is this a bear market rally asking for a friend? No, it's a real rally. People sell fear and are calling for housing collapse. They try to compare today's market to 2008, but availability housing supply is 73% lower today than 2008. If you're predicting a housing crash, you're wrong. I love it. So direct and so true. Grady called the general commodities bear market low back in April 2020. New governments are pointing to lower inflation, very temporary. Second inflationary wave will start soon. I suggest you get prepared. This is DBA monthly agriculture. It looks like it's ready to start to try to break this inverse shoulder, head, shoulder. There's a lot of inverse head and shoulders around the world for a bunch of different commodity sectors. This looks ready to go on up. Here is GDX. Did you switch or are you still waiting? This is GDX versus SPY. Everything's starting to turn to the upside here for GDX to outperform the S&P 500. Looking pretty bullish for GDX. It says, if you think investing is gambling, you likely just need to lengthen your horizon. You need to zoom out. This is the probability of negative returns based on S&P 500 total returns from 1929 to present. Your probability of losing money on a one-day time frame is 46%. 1 month, 38, 32 on a quarter, 25 on a 1 year. And if you stretch your time horizon out to a 10-year time horizon, it's 6%. You know what I do? I look at the trends and I lengthen my time horizon out to like 10 years, a decade. And that's why I make a lot of money, because my time frame matches what the markets want. And again, I learned the game by watching the game, and the game taught me the game. I said game there quite a bit, but yeah, that's why I take a longer time frame, and that's why I invest using ratios and all these other strategies that I put in place. It says, yeah, seen that chart. However, it doesn't provide the kind of realistic perspective when we look at oil production and its impact on all other energy sources and the world population, nothing survives the exponential function. So this is world population growth. I don't know which one. Let me see here. World population is the green, global oil production is the red. And you can see how these are going up together. What gets scary is, well, what if oil production doesn't increase exponentially like our population has alongside of it? I know a lot of people think renewables are going to come in here, but I don't think renewables are the answer. I mean, maybe nuclear, but nuclear is also, I don't think, going to be the ultimate answer for oil. Oil has many uses that electricity generation, outside of electricity generation. The currency pair, he's talking about the Swiss franc and USD breaking out. More evidence that the commodity bull market is coming. We've got new listings data has been trending at the lowest level recorded in history for 12 months now. There we are at the lowest recorded history for new listings. The housing market's lock-in effect is told by two charts. He's talking about the lock-in effect for low interest rates. You can see new listings is very low. And then the next one, this is the percentage share of outstanding mortgages by interest rates. Less than 3, 3 to 4, 4 to 5, 5 to 6. And even if these rates, if people say, oh, they're unaffordable, you're not going to get any more affordable than these rates down here at less than 3%. So could be a bigger picture for silver be any more bullish? Not really. So he doesn't think the bigger picture is going to be more bullish than what it currently is. I think it looks fantastic for silver. Gold looks good. Everything looks good. Everything looks good in commodities. Whatever happens next is just the beginning. So he's talking about the silver junior miners, 9 years in the making, ready for a moonshot if we can get off this launch pad here, which is a fair way away from where we are today. Is the launch pad to launch to the moon. The Dow Jones versus gold ratios topping big picture. Said would see a yellow breakdown and back test now, back test which fits perfectly with gold bottoming here. Chart means gold will outperform stock market going forward. Capital flows are moving towards precious metals. Totally agree. There's your head and shoulders top where we could head lower and gold outperforms Dow Jones. Keep an eye on the banking sector. Nothing has changed since I started pointing out the technical breakdowns a few months ago. This is Bank of America breaking on down, ready for a big crash there, potentially. Interesting read, can't disagree for the most part. I don't see why people are going to sell their stocks. The big short investor says the data is still very, very strong. The Fed keeps raising rates. It hasn't had an impact. Until it has an impact, we'll keep chugging along. Morningstar's housing starts outlook through 2020 or 2030. Our thesis remains the household formations among the largest millennial cohort will provide a long-term growth runway despite more challenging near-term affordability conditions. So they expect a elevated level of new homes being built is what they expect, and that's good for the commodity bull market. Gold seasonality is just getting going for the 7 months here, so we're right here, and you can see that we could get a nice good seasonality coming out of this. Oil surge shows long-awaited market tightening is here. So we've got that as well. And I think that's about it. We can okay, no, we got here. Inflation is over. Commodities beg to differ. Got gold and silver. These are ready to break this big breakout pattern for the CRB index. The consolidation, we're starting to break that consolidation to the upside. This could be the beginning of that wave 3 for this super cycle. That's the CRB to S&P 500 ratio down to the bottom here. Electric vehicles will increase natural gas use in California. Most EV owners charge their cars at night when the electric grid is powered by natural gas. Natural gas generation in California saw its highest values in at least 6 years. So we're just stepping up year after year the demand for natural gas in California. And it seems like wherever we implement more renewable solutions, we burn more natural gas. Morningstar, we don't view seasonal and occasional use homes as shadow inventory. There were 1.2 million available short-term rental units in 2022, or 4% more than pre-pandemic levels. The current supply of short-term rentals represent less than 1% of the housing stock. These rentals that people are talking about and the potential bust is a very small percentage of the housing stock, just to let you guys know. Uranium versus the Sprout Physical Uranium Trust. Equity outpacing spot price of uranium indicates a second equity bull market is ahead. Here we go, guys. It's already heating up. It's already underway. We've broken a lot of the falling wedges or pennant formations, depending on what you're looking at. But yeah, it sure looks like it's ready to go. And that's where I'm going to end it, guys. That's where I'm going to end it. All right, guys, give me a thumb up, subscribe to the channel, subscribe to the website if you'd like. And that's what I've got for today. So we'll catch you next time. This is Finding Value.